Everybody. So let's go ahead and
What's
we'll
up,
get it
Shannon?
started. What's that?
What's going on, man?
Hey, what's happening, bro? Where are you? You're on the other page. There you go.
Yeah, I'm here with my kids. I won't have the video on. Close the door. All right.
There you go. There you go. So anyways, today's topic, hope everybody had a great week, by the way. It was, last week we were off. Of course, we were on the cruise, and what an awesome experience that was. And hope every single one of y'all is able to join us next year, right? Sean's a fan of the cruise, that's for sure. He loves it. And so we all had a great time. So I'm excited. But after like a couple of days, I was ready to get back at it. I started getting antsy. I'm ready to go. And so let's roll up our sleeves and get into some equity protection today. Like who has ever had like an older client and they're like 78 years old and the bank, for whatever reason, decided to give them a 30-year loan on a $300,000 property, right? And you're like, perfect. You look at the lead, you're like, $300,000, awesome, 30 years. Shit, they're 78. You're like, oh God, what do we do, right? And so that's where equity protection comes into play. If you guys were on the telesales call on this earlier this week, Bree did an amazing job, by the way. And she had a line, I'm going to go ahead and steal it. Right. This is the best business ever. It's just copy and paste, man. Copy and paste. And I'm always hearing nuggets. That's a beautiful thing about training. You can always learn from somebody. You're going to pick up one or two things, and those could be the one or two things that can change your business. Right. Like the one thing that changed my business was when I started listening to podcasts in my car. I started listening to True Talk and Inside the Sale in between appointments when I'm driving, right? It's like the car's your university at that point. And one podcast that I listened to was when they were talking about expectations, right? And that's a huge part of our presentation at Champions, is where we're explaining how the call is going to go, whether it's on the phone or whether it's in the home. I've done it both. But that's when, I listened to that nugget and I immediately applied it in my next call. And lo and behold, I closed 2 apps, protected husband and wife, right? Just by explaining the process to them, how what we were going to do. So anyways, what Bree said the other day, she goes, we're going to find a plan that will either continue to pay the mortgage or protect the loan in full, something to that effect, right? So that's where equity protection comes into play. We continue to pay the mortgage, right? And again, going back on what we talked about a couple of weeks ago, with your clients don't really know what they want. They have an idea. They have a need for final expense. They have a need for mortgage protection, whatever. What they want is something that makes sense in their budget today and will make sense for their family when they die. All right. That's what equity protection does. It just continues to pay the mortgage and prevents their family from running from the cemetery to the real estate office to go ahead and take the first lowball offer they can to go ahead and get this property out from underneath them, to go ahead and collect the equity in the house to give them some kind of a nest egg. Equity protection will go ahead and buy them time to go ahead and continue to pay the mortgage. That will give them, in some cases, if it's affordable in their budget, extra funds to go ahead and do any necessary repairs to the house, right? And these are things that I'm kind of like explaining to them, right, along the way. Like you might have a heating and air conditioning unit that goes out. When was the last time somebody priced a heating and air conditioning unit? They're expensive. I used to be in that business. I know. There's not too much I haven't sold, right? But that was a business I was engaged in for a long time, and heating and air conditioning is expensive. Trust me, anywhere from 10, 12, 15,000 bucks, right? For a system, right? They might need a roof. You guys know how real estate agents are. They're like, oh, we got to go ahead and declutter. We got to go ahead and put in new carpet. We have to paint. Let's do some landscaping. All of these things are in an effort to go ahead and maximize the sale of the house, right? And these are some things that we just need to consider when we're thinking about what does it look like when someone dies. I just had a death claim yesterday. He's 86 years old. I met him when he was 83, right? There's only a $15,000 policy, but it's what he could afford. And that was 300 bucks a month, by the way. And he paid it for, over 3 years. He paid almost $13,000. So when you look at it money wise, he came out ahead, right? But it was for his son. He was like, I just want to go ahead and make sure my son's taken care of. He rented an apartment. It's not relatable, but as far as equity protection goes, but what does it look like financially upon death? These are the things that we have to consider. So what does it look like for your clients? What do they have to do when they sell the house? Right? These are the questions that we ask ourselves so that we can go ahead and explain it to our clients. Does that make sense? Right? Okay. So as we're talking with our clients, like last week when we said how to pivot, right? The art of pivoting, where we're talking strategy prior to discussing anything about the term, living benefits, what the plans can do for them, this and that, cash back. Oh, wait a second, they're not 60. Now they don't qualify for, right? All these little mistakes that we make and we shoot ourselves in the foot. So what we need to do is just go ahead and talk to our clients and say, hey, Adam, like when you pass, are you trying to make anybody rich here? Are you trying to give them a house? Or are you just trying to provide some options here for your family that make sense in your budget today?
Just options.
You're just looking for options. Okay, I got you. Right. So you just want to make sure that the family can go ahead and continue to pay this mortgage for a while until they get a good offer on the house that they can go ahead and accept. Is that right?
Yeah, I don't want them to lose the house. That's my primary concern.
All right. You don't want them to lose a house and you want something that's going to make sense in your budget today, right?
Yes.
All right, cool. Can I give you a tip? Right.
Yes.
This is what the majority of my clients are doing in a situation like yours. Like your mortgage is how much per month?
2,800.
2,800 bucks, right? So like almost $36,000 in a year, right? Does your who's your beneficiary?
It's going to be my daughter.
Your daughter, how old is she?
She's 17.
All right, she's 17. She's not of legal age yet. So who's going to be the adult beneficiary?
It would actually be her mother. Then we'll have to make
her mother.
Yeah.
All right. Does her mom? What's her name?
Her name is Taryn.
Taryn. All right. Does Taryn have an extra $36,000 laying around to pay the mortgage?
Oh heck no! She's 36 in the debt every month.
Okay. I got you. All right. So we just want to make sure that Taryn has the funds necessary to pay the mortgage each month, right? Until they solicit a good offer, okay? To go ahead and take that equity, to go ahead and provide that, give that equity to your daughter, right?
Right.
Am I tracking exactly here? Is that what you want to do? Okay,
perfect.
Got it. Now, how old is your house?
Built in 1974. So
built in 1974. Okay. Depending on when you pass, man, like not only does the mortgage need to be paid, but you want to make sure that there's that we're going to go ahead and get the best offer that we can, right?
Mm-hmm.
You know how real estate agents are, right? They're going to say, hey man, you need some new carpet. Let's go ahead and spruce up the place. give it that curb appeal, right? We might have to do some landscaping. There might be some new paint, carpet. God forbid if you need a heat and an air conditioning unit, man, those things are expensive as all get out, right? So in addition, we want to make sure that the house is being paid, but also there, whatever fits comfortable in your budget, there may be enough money left over to go ahead and take care of any odds and ends like that. Does that make sense?
Yes, that does.
Okay, got it. And so what I'm going to say at that point is, hey, Adam, my job's simple. I'm going to go into my expectations, right? How the calls are going to go. I'm not talking about living benefits. I don't know what he qualifies for yet. Okay. Now, in this case, Adam is younger. He's got a 17-year-old daughter, right? And unless he's like Robert De Niro or one of these other actors that are like 90 years old and have a 2-year-old, right? That might not be the case. So, but what we need to make sure is whenever we're talking equity protection, and it doesn't necessarily have to be an older client. This is what we have to do for an older client, right? Because term's not an option for them, right? And we have to find something that's going to be, in their budget that makes sense. I've sold, like 3-month, equity protection plans that fit in their budget, but it made sense. Now, look, it might be a little bit tight, but this is going to go ahead and continue to pay the 3 months worth of mortgage payments, right? But you got to continue to live now, right? You need to find something that makes sense in your budget now, right? And this will help out then, for 3 additional months. Okay. So, but even if they're a younger client, who's ever had a younger client like in their over 35 and they couldn't get qualified for a term? Like, yeah, about like insulin, whatever. Like younger people, I'm finding lately, y'all let me know based on your experience, but I'm finding that a lot of younger people have some health issues and we can't get them qualified. And that's a problem, right? But it could be a case and for but let's say a $300,000 plan was too expensive, right, to fit in their budget. One of the word tracks you might want to go ahead and use is when I'm explaining things to them and at the beginning of the call is like, hey, my job's simple. Is just go ahead and find out exactly what you qualify for and find something that makes sense in your budget today and makes sense for your family when you die. Now, a full mortgage protection might not be in your budget, but that's okay because we have plans that will make sense and continue to pay that mortgage for your family until the dust settles and they can figure out what's going on. And then I'll go right back and say, hey, you trying to make somebody rich here? You trying to go ahead and provide a free house? Or you just want something that's going to go ahead and make sense in your budget and prevent a financial disaster or burden for your family? That's it. So the biggest thing on that is we talk strategy before product, right? And always build value. Like what we've been talking about, always build value every step of the way. Just like I told, Mr. Ives, my 86-year-old client that passed away last week. I said, Mr. Ives, I know how much you love your son. Trust me, I'm going to be there for your son when you can't be. And he really appreciated that. He loved his son. I brought value. I'm going to be there for his son. And as soon as I found out yesterday, what did I do? I called his son up. He called me right back. He goes, that was my dad's phone. I said, yeah, your dad couldn't remember your telephone number. And I forgot to follow up. That's my bad. I said, but I figured you still had his phone. He goes, yeah. He goes, well, this is my phone now. But I was able to talk to him and say how much his dad loved him and thought about him. And it made him feel very, very good. Right. I'm going to help him with the paperwork and this and that. Always build value. Now, so we're explaining these things in advance. And I would say one of the things that I took away from this past weekend on the cruise. Was Sunday we had a meeting and with the carriers and everything. Well, Sean brought up, about maybe 10 producers, right? And Giordano was one of them. And so Steve summed it up really well. And he did it by category. He was like, all right, so we got a few annuity producers. We've got some producers that are strictly final expense. Steve, Sean asked Steve, hey, what do you sell most? And he said, whole life. He said, really? He said, yeah. And so when it was time for Steve to speak, he said, I'm not giving away my cards. I'm not showing my cards right away. I don't know what they qualify for. So I'm strictly talking about what plans can do, what's going to make sense for their family until I find out. So whether they qualify for whole life or term, whatever it is that they understand, it's going to be all about what they qualify for. And we just need to find something that makes sense in their budget and makes sense for their family when they die. Like, what I'm talking about is not anything that I thought of. I'm going to be very clear on that. Like, everything that we're talking about today are things that I've learned from Brian Mendenhall, from other leaders like Giordano and True Talk, and listening to, like, I've learned so much from other producers that I can't even remember their names, right? Because I'm always plugged into the trainings. And I take those golden nuggets that, the one or two, and I implement it. If it works, it works. If it doesn't, it doesn't. Right. I've forgotten more things that don't work than remembered things that do work. Right. But I'm always willing to try them. Right. So the biggest thing that you want to do is don't give away your cards. Don't show your cards, like Steve Giordano said. Right. Now, with that, I mean, there's only but so much that we can talk about as far as theory of what equity protection can do. Does anybody have any questions right now on equity protection and how to explain it to their clients? Like, any questions at all? None. Y'all are making my job really, really easy this morning. Thank you so much. The coffee hadn't kicked in yet. All right.
Hey, Shannon.
So, yeah, go ahead, Brian.
All right. So on equity protection, you breaking down how many months is paying of the mortgage? Are you breaking down things like that?
Absolutely. Yeah. And how we do that, Brian, is when we're asking questions in the financial inventory. But as far as the basic premise of it goes, I discuss a strategy before I even find out what they qualify for, and even before I find out what the mortgage is, how much it is. I need to find that out pretty soon. What I'll do, y'all, is when I have a mortgage protection, and well, let me ask you this. All right, how many people are doing one call close? How many people are doing appointments?
50-50.
I've been doing appointments.
Appointments? Okay. I do appointments as well, but I also do one call close. And so the thing is if it's a one call close or if it's an appointment. All right, Sonia. Yeah, it's kind of a hit and miss, right? So probably a little bit of both for everybody. All right, let's take a one call close. Okay. Yeah, Connie's like, one call close if possible. But if I can do a one call close, that's what I'm doing, right? Because while I got them on the phone, that's the best thing. But if it's a one legger, let me see. Wendy said, what age do we start considering mortgage protection? Mortgage protection is good for at any age. Right. It just depends on what's going to be in their budget. Right. But equity protection is something that if they can't afford the mortgage protection, if they don't qualify for, term. So it's going to be not necessarily by age, but basically what they qualify for and what they can afford. Okay. So because if a true mortgage protection is going to go ahead and pay off the entire loan. Right. Then we're going to go maybe 100%, 75%, 50% for the mortgage protection, right? Or if they don't qualify for that, then we switch over to a whole life, which is going to pay so many months or years of mortgage payments. Now, but let's go to a one call close. And let's say, Keisha, role play with me for a second. All right. So ring, ring.
Hello?
Hey, Keisha.
Yes, this is Keisha speaking.
Hey, Keisha, Shannon Womble calling. Keisha, you don't know me from a hole in the wall, but guess what? It looks like I'm actually getting back to you. You filled out this form requesting information on protecting your loan with Truist. Looks like that amounts to $300,000, right? You filled that form out and sent it to my office. My job is simple. I just need to verify your information quick to make sure what we have is accurate. I'll be brief. Okay.
Okay.
All right. Perfect. I have your address as 123 Success Lane in Wilmington, Delaware. Is that right?
That is correct.
Okay. Perfect. And I have your age as 36. Is that right?
Yeah, that's right.
Okay. All right. And it says here that you're the only person or the loan. Are you single, married, widowed, divorced?
I'm single.
You're single. Okay. So you're 36 and smart. Got it. All right. And now who was, when you filled the form out, who is it that you're looking to protect?
My kid. I have
Your
one
kid.
Mhm.
Okay. Got it. And how old are they?
12.
12. Okay. All right. So 12 years old. Do you have anybody like a parent or anybody? Because, 12-year-old Keisha can't go ahead and obviously they don't know what to do with a check, right? They're not old enough to go ahead and receive these funds. Who is it that would be the adult that would be receiving the funds for you?
You could put down my father.
Okay, your father. Okay, got it. So we want to make sure that or were you trying to make anybody rich here and give a free house? Or you're just looking for options since you're single? It's not like your daughter can go ahead and continue to live there, right? And pay the mortgage. So are you just looking for options, or what is your goal? You tell me.
I'm trying to pay off the whole mortgage.
You want the whole mortgage paid off? Okay.
Yes.
Got it. All right. So, and then what I'm going to do is say, okay, let's talk about the mortgage real quick. The mortgage is with Truist. We know that it's 300,000, whatever it is. Was that a 30-year loan?
Yes, it was.
Okay. And what was the APR on that? Your rate?
3%.
What was that?
3%.
3%. Wow.
Yeah.
Who do you know?
I know some people.
Yeah, obviously. All right. So 3%. Now, Keisha, were you planning on paying that house off early? Or are you going to, is that your forever home? You're just going to ride out the 30 years.
I'm just gonna write out the 30 years.
You're going to ride out the 30 years. Okay, got it. And how much is that mortgage payment?
1,200.
$1,200. Okay, got it. All right. So we've got some very important information that we just found out. Okay. The mortgage is 30 years. It's at 3%. She's going to ride out the 30 years, right? The reason why I asked the percentage is in case she wants to go ahead and pay off the home, I can go ahead and run an amortization chart. And if I'm going to do a cash back offer or anything else like that, I know exactly how much cash she's going to need. Okay. Because it's not like, some folks are like, hey, at the end of the 30 years, you're going to get this big check, or 25 or 20 years, you're going to get this check from America or whichever company, and you can pay off the house early. Well, be careful what you say, because if you don't run an amortization chart and you don't know how much money they actually need to pay off the house, then that's not a good thing. You basically said something that you don't know if this plan is going to do or not. Okay. So always find out what the APR is, so that we can go ahead and get a good idea of how much money is left or is owed at the end of 20 or 25 years, so that we can back that statement up with facts. Right. So that's what the information that I'm gathering, that's why. Right now. So that's on a one call close. Keisha was very, very nice to me. Thank you, Keisha. She didn't give me any objections or anything else. Now, if it's an appointment and I call them up and I would say, hey, Keisha, Shannon again calling for the mortgage protection appointment, right? That we agreed on the other day. How you doing?
I'm good. How are you?
Oh, perfect. Hey, let me just go ahead and refresh my mind, make sure everything is accurate. Your mortgage is, I start out by talking about the mortgage, right? I don't go into the medical or anything else. I'm talking about the mortgage. What is it that, it was just weird to me, like if I go straight into the medical side of things, right? It's mortgage protection. It just makes sense to me for me to start with the mortgage to go ahead and get a good idea of get all those facts and find out exactly what they're trying to go ahead and do. And then I can go ahead and talk, if it's an older client, we can go ahead and discuss some strategy. Hey, by the way, remember guys, this is just a conversation that you're having, right? That's it. And when you, like Vanita, right? Vanita, unmute for a second.
Yes.
There's your little cutie.
Yeah.
So this past week or so, right? You've been calling mortgage protection for a while. And before you're using the phrase what?
Payment protection.
Payment protection. And then you switched it up to
Equity protection.
equity protection, right? And all of a sudden, like last week, you submitted over 15,000, right? Lights out. And there was just a little switch from payment protection to equity protection. And I guess it just started making sense to your client, right?
Yeah, all I said was I can't really get you covered for the full amount of the term, but I can protect your equity. I can offer you equity protection.
That's smart. That's brilliant. And so now, were you talking strategy early?
Yeah, I just cut to the chase, regardless. I blamed it on their medical and their age. I said there's just no way.
Right.
But let's figure out how we can still get your family some money.
There you go. That's perfect. So if we give them options early, thank you, Renee. If we give them options early, right, and say, hey, Adam, man, my job's super simple. It's just go ahead and find out what you qualify for. I don't know about you, but I'm on a tight budget, right? Where the amount of coverage that you get, I understand that you want to pay off your house, right? You want to do everything right for your family. I got it, man. But at the same time, we have to balance what we want with what's realistic in our budget, right? So something's better than nothing. Are you wanting to go ahead and provide some options to give your family some type of protection that's going to fit in your budget, right? That makes sense. Is that what we're trying to do? Yes, it is what we're trying. Okay, got it. All right. My job's simple. It's to find out what you qualify for, who's going to get you the best rate, because I'm contracted with, over 20 carriers, whatever it is that you say, all A+ rated companies. I promise you this. We'll find something, and this is where I'm implementing what Bree said. I promise you this. We'll find something that will either A, continue paying the mortgage so your family isn't running from the cemetery to the real estate office to take a lowball offer right off the bat. Or if we can, we'll go ahead and provide the maximum coverage possible for you to protect this loan. In either case, we're going to find something that fits in your budget. And we're going to find something that makes sense for your family when you die. Sound fair? They're like, yeah, sounds fair. But you got to get that buy-in. You got to get that buy-in. Like all of these things, they make sense to us because we're in the business. And then we just start, I think over time, I know what happened with me, is that we kind of take for granted that the client should just automatically think the same way that we do. Well, doesn't this make sense? You don't get it? What are you, stupid? No, they're not. They're not stupid, right? I think that sometimes we can just kind of rush through the process and say, oh, this is great. It's got living benefits, Keisha. Like if you get sick, girl, you're going to be able to go ahead and get this money and you can continue paying the mortgage because it's called mortgage protection, right? And we want to go ahead and be able to protect the mortgage when you die, but we want to protect the mortgage while you're living too. So in case, God forbid, you got sick or injured, you couldn't go to work, you can't get a wage each week. That's going to be a problem, isn't it? You're like, yeah. Well, girl, this thing is going to give you money in case you're living, or your family money when you die. But either way, it's going to give a check to somebody, and that mortgage is going to be paid. All right. And that's what you want. Right. And so you get all excited about the living benefits, as you should. And we're transferring energy to the client. Like, this is what can happen. Right. Like, Brian's really, really good, like boom, boom, boom. And he's got a bloody license. I don't know if you've ever watched Call to Close, but Brian's awesome. And he's telling the story about, the police officer knocking at a door late at night, holding up a bloody license. I'm sorry, ma'am, is this your husband? Right. And so he's drawing that emotion out. Right. So as we're transferring energy to our clients and getting them excited about what this can do for them, and we paint the reality, right, of their financial situation upon death. And then we find out, well, damn, they're taking insulin. They don't qualify for this. And going back to taking a kid in the candy store, tell them, say, hey, you got a cart full of candy, and then you go to the register and then you tell them to put that back. They're kicking and crying. They're screaming. They want that damn candy. Well, your clients want that product, and they're going to fight tooth and nail to find somebody that can go ahead and get them qualified, because now you're not doing your job. You're not the good agent. Right. And it's not that you're not the good agent. It's just that you put the cart before the horse. So let's slow it down on equity protection. Let's slow it down on every single call. And let's talk strategy and with your client, and make sure that you get the buy-in on these different ways to protect the mortgage. Questions like, hey, Brian, are you just looking to go ahead and provide options for your family? Right, that makes sense in your budget today. It makes sense for your family. Or are you trying to make them rich? Right, like, keep in mind, this is going to be based on your budget and what you qualify for. But something's better than nothing. Do you mind if I give you an insider tip? Do you mind if I give you an insider tip? No. This is what the majority of my clients are doing. Like, I was talking with Adam in room 7 the other night. People love doing what other people are doing. They're sheep. Right? They're sheep. And they love to be told what to do. And they love doing what other people are doing. So a couple of key phrases on that, and then we'll get on some Q&A. Some word tracks that I love saying is, let's do this. Let's do this comes in handy a lot when either A, you want to go ahead, you don't know, like, if they're going to qualify. I love this one. I open up an Americo app, and I've already explained the process, and on how the app looks and everything else. And you got a touchy one here, and you just don't quite know if we're going to be able to go ahead and get them qualified. David's really good at this. He'll say, hey, Val, let's do this. We have a few concerns here, right? As far as your medical. Like I said, my job, it's not to sell you a thing, Val. It's to go ahead and make sure that we can go ahead and get you qualified, right? So let's see if we can get you through a pre-qualification process and see if this is even going to be remotely possible for you. Let's do this. Let's see if we can get you through the pre-qualification process. And then I'm doing the app right then and there. And if we start with term, if it comes up D and Q, I know I got to pivot. Either I know I should go to prosperity at that point, or I'm going to shift over to whole life. I don't want to sit there and waste a whole bunch of time going from carrier to carrier to carrier. I'm trusting on my underwriting prowess, right? And I still need help, right? But we got the Genie and we got all these insurance toolkits and all these tools. But so I just open it up and see if I can get them through the pre-qualification process. And they're not like, yeah, that sounds good. I don't want to waste time. Your time's important, so is mine. That's another one. Your time is important, so is mine. I don't want to waste a single minute. Right? That's another good thing. So let's do this. We'll get you through a lot of things. When you want to baby step, when you want to take your client from point A to point B to point C to D to E to congratulations, you're approved. Let's do this. All right. Another thing that I'll say when some key phrases. Now I'm drawing a blank. What are some other things that I say, Val? I'm gonna put you on.
Does this make sense?
Yeah, everybody says that. Does that make sense? Does this make sense? Right.
That one.
The other
and-
thing I'm going to reiterate this one. Okay. Who's still having a hard time getting social security numbers? I know this doesn't have anything to do with equity protection, but if you're having a hard time getting a social, I got this from Josh last year. In order to verify your medical records, prescription history, and to match your death certificate to the policy, they require your social. What's that? Or they need your social. What's that? And shut up. We can always use that one. Okay. Here's another one. Little trial close. Something is better than nothing, right? Yeah. If I'm in the home, I do this because I was selling in person forever. If I was at the car lot, I would sit there, I'd say something, and I'd go, hey, Keisha, that car is sure is pretty, isn't it? And I'm shaking my head up and down. Or like if I'm in the home and I'm like, hey, Adam, this plan makes a lot of sense, doesn't it?
Yeah.
Can you see how a plan like this makes sense? That's a huge one. Okay. Like, all right, my pump is getting primed now. I'm getting ready to get on a roll. All right. So do you see how a plan like this can help you and your family out?
Absolutely.
Right. Like that's huge. You've already explained everything. You're going benefit by benefit. If you had a critical or chronic illness, you have access to this money in case you can't go back to work. Do you see how that can help you while you're living? Yes. Yeah. Right. And you've already found out that they don't have anything like that. You know, do you have any short, long-term disability at your job? No. No. Okay. Do you see how this can help you? Because 90 to 95% of all disabilities are caused by critical or chronic illness. Do you see how this can help you? You're like, yep. Okay. So it's 9:41 now with basically on equity protection, guys. It's just a means to go ahead and protect the loan. That's it. Your clients just want something that's going to go ahead and make sense in their budget today and make sense for their family. These are the majority of our clients are all blue collar folks, right? They're on a tight budget, man. They just want to protect their family. I don't care if someone is, like on the poverty level. I don't care if somebody's, rocking and rolling $500,000 a year. I don't care how much money you earn. the majority of us all want one thing and protect our family. Our job is just to go ahead and find something that fits in their budget. I heard a client one time, or an agent one time, say, I don't sell any policies that's under $50 a month. I don't agree with that. If that works for you, fine. We all love the big premiums. With big premiums come big chargebacks. Okay. I'm not afraid of chargebacks anymore. I used to be, but not now. So I'm not afraid to go for the big premiums because I'm asking the right questions. I'm uncovering the need. And then I'm finding what they said will fit in their budget. And then I'm going to try and back it down a little bit more to make sure it's comfortable. Because then when I do a policy review, I'm going to say, hey, did we hit the nail on the head? Is that the perfect amount for you and your budget? Or did you want to go ahead and increase some of that? I can always add more coverage later. No big deal. But if someone is on a tight budget, and most folks are nowadays, and we hear people say this, I hear agents say this all the time. All my clients are broke. All my clients are broke. So my question at this point is going to be, well, talking to the agent, how much is their cable bill? How much is their cell phone bill? Do they go out to eat a lot? Or do they buy their groceries? Are they eating ramen noodles? Or are they eating steak? How much is their rent? How much is their mortgage? How much is their car payment? How much credit card debt do they have? Because then once we go ahead and find out what their income looks like, and we can do it in a nice way. Okay, and I'll give you the word track for that here in a second. We have to find out how broke they are. And if I'm looking at it and I'm like, dude, you broke. Who's heard that little boy on Instagram or Facebook and says, Jaden has 2 quarters, a nickel, and a penny, right? How much money does Jaden have? And he's like, Jaden broke. Right? I love that little kid. He makes me laugh, right? It's so funny. But that's the reality for some of our clients. And it's okay. I don't judge them, man. I don't judge them. But if we can say, all right, look, man, if I understand that right now things are tight, but if you can afford $1 a day, we can go ahead. God forbid that if you walked out tomorrow and you got smacked by a bus, right? We can go ahead and get you like close to a $500,000 accidental death policy. It's $1 a day, bro. You want to swing that? Well, yeah, I can do that. Cool. I'm going to follow up with you in a year, and we'll see if we can go ahead and get you some traditional coverage. There's always something that we can do. I'll tell clients, look, I get it, man. I'm on a tight budget too. But I've never needed permission from anybody to protect my family. I just do it. Bro, we're talking about, now, here's a little close for you. I know we're stepping out, but I want to leave you with something that hopefully you can use today to help close the deal. Saturday's a good day. All right, so let's say that we're at $120, or we'll just keep it simple, $100. Nice simple math this morning. Now, Nina, this policy is $100. And you said it's, you can't swing that. You knew that this wasn't free, right?
Yes.
Okay. Now, how much were you anticipating this plan was going to be that fits in
More
your
like-
budget?
More like 75.
More like 75 bucks. Okay. Got it. All right. So we're apart like 25 bucks. Okay. At that point, guys, what I'm going to do is I'm going to look through the budget and I'm going to say, hey, your cable bill, that's kind of high. You know what my wife and I did after we found that I got this idea from one of my clients, which was actually my son, who is my client. Okay. By the way, if your family members aren't your client, something's wrong. But I was like, we just stream everything now. You know how much money I save? You should do the same thing. And now you have the 25 bucks that you can go ahead and afford the coverage that you wanted to go ahead and do. Does that make sense? You're like, yeah. Okay, cool. Let's see if we can get you qualified. We've got 30 days where we can go ahead and go up or down in coverage if need be. Like, but there's all kinds of ways that we can pivot to go ahead and close the deal. But if you do the financial inventory, if you didn't do it and just say, hey, cut your cable bill down in half. Oh man, it's already down. You don't know that because you don't have the facts. Get more information. Find out if I'm broke. All right. That's all you got to do with that. Anybody have any questions? None? There's 36 people on here. Nobody got a question.
But it's really a client that potential client that I came across the other day. And it's kind of got me a little baffled because she's one of those, it's a mortgage protection lead, and she's one of those that just wants the quotes. So I got a lot of information out of her, but there's still a lot that I didn't get that I need to go ahead.
Like
and
what?
give her.
Like what?
Um,
What information do you need?
and her ex-husband are co-owners of the home. They got back together just to leave something for the kids or whatever. They've been in the home 10 years and got 20 more years on the loan. She said, now this is what she told me, but it doesn't make sense. She said she has $500,000 term on her. She's 62 and he's 72. And she got $300,000 term policy on him. And they've had it for 5 years. So I'm like, well, what do you need? You know, what are you trying to do here? And she wants 500 or 600 thousand term. That's what she wants now. And she says she's got 700,000 equity, but her house note is only 3,000 a month. And so at 10 years, what I figured was 360,000. So those two figures is not adding up for her equity. So I don't know which direction to go. And the husband is unhealthy. He was in the hospital 2 months in 2022. And she's fairly healthy, but she just had COVID a month ago.
Mm-hmm.
So I don't know what to do with this.
Well, one of the things that we want to do, what's her goal? When she filled the form out a couple of years ago, is what I'm assuming is probably an age mortgage protection lien. Am I right?
It is.
Okay. When she filled that out a couple of years, she's had the policy for 5 years on both of them. Like, what is it that she wanted to do, Connie? Like, what's her goal? Do you know that?
All I can figure is I didn't really get down deep enough, but she wants to leave something for the kids. The
Okay.
older daughter is 40 and the son is 32.
Yeah. So we have all this information, but we still don't know exactly what it is that she's trying to accomplish.
Mhm.
Okay. So early on, I don't know if I'm going to be able to help you with this one in this short amount of time, right? But early on in the process, like moving forward on all of your calls, the
Mhm.
reason why I start out the way I do is to find out exactly what they're trying to accomplish. Right? So everything's very intentional in what we do and how we say it. I say it the same way, not same way. I say it different ways to different people, right? Because you have to be a chameleon. Now, but I always say the same thing. And that's like this. Once I get some basic information, right? I'm going to say, Connie, now
Yes.
your time's important, so is mine. I think it's really important for me to be on the same page as you. When you filled this out a couple of years ago, what were you trying to accomplish then? And what is it that you're trying to accomplish now? So I can best serve you. And shut up. Like they've got all these different policies, this and that, right? We all know that they want to protect their family in some way. Our job is to go ahead and find out what they qualify for and find something comfortable. But if we get all this information, like you're in your wheels at this point because you don't know exactly what she's trying to accomplish. Right. And I feel bad because I can't guide you because I don't know what she's trying to accomplish. Without that, we don't have any direction. Because you can,
basically-
like, time is our most.
Yeah. I asked
Go
her
ahead.
right in the beginning, just trying to keep her on the phone. And I said, what kind of offers have you been getting? And she was like, way too high, like 3,000. I'm like, 3,000 a month? 3,000 what? What does that mean? You been getting offers of policies that the premium is 3,000? So she wouldn't really let me go deep when I was trying. She kept pushing back, well, I just want the rates.
Okay, this is what I tell somebody that gives me pushback and it's not giving me any information to go ahead and help properly guide them. Okay, and I say it in a nice manner. Right, Connie, I'm not the quote guy.
Yes.
I'm not the quote guy. You see, you can get a quote from a billboard, you can get a quote online, you can get a quote from an agent, right? It doesn't matter. You know, you see it on TV, right? A quote for $9.99 a month. You and I both know you're not getting insurance for $9.99 a month. You're 72 years old, right? You're not reading the fine print. That's actually $9.99 for every $1,000 worth of coverage with a 2-year wait period. A quote is going to protect your family. A policy protects your family. And my job is to make sure that I get you qualified. Like I said, I'm not the quote guy. If you're serious about getting the protection that you need, then let me do my job. I'm going to ask you some simple yes, no medical questions. I'm going to find out which company is going to go ahead and get you qualified. And out of those companies, which one's going to give you the best rate. But I can tell you right now, I could say, hey, Connie, it's $50 a month. You want to do it? And you say, yeah. And then I find out you don't get qualified for one plan, you get qualified for another plan, and all of a sudden it's $500 a month. I'm not going to do that to you because your time is important. And mine is equally as important too. Now, again, what is it that you're trying to accomplish? And I put it back on them. If they still push back, Connie, it's okay. Hang up, keep it moving, get on to the next client.
Yep.
You know, because you're super, super nice on the phone. You're good at what you do, right? You've got to get on to the next client that wants your help. Don't waste a bunch of time on people that don't want your help and are pushing you back all the time. Stand up for yourself. Stand up for yourself. You're a professional. You're welcome. Like, I'm not a punk when it comes to sales. I'm not. And I don't mean a punk like, you know, somebody's going to kick my butt or I'm going to kick their. No, I stand up for myself. And you have to have that mentality. You have to have that confidence. And what you need is to have courage to stand up for yourself. Does that make sense? Because when you're new in the game, you want to go ahead and be nice. I'm telling you right now, NICE does not pay your bills. NICE does not protect the families. If I was NICE 3 years ago when I sat down with Mr. Ives, and trust me, we did not start out at a $300 payment. We started out higher. Okay. If I was NICE and say, Mr. Ives, I understand. I get it. It's expensive. Go ahead and think about it. I'll call you back in a couple days. Do you think that he would have the check being delivered to his son right now?
No.
No.
Mm-mm.
No. NICE doesn't pay anybody anything. Okay. Now,
So
that
Shannon,
doesn't
speaking of
mean-
NICE,
yeah.
I'm
go
sorry,
ahead,
I
Doug.
didn't mean to interrupt you.
No,
I
go ahead.
apologize. What happens when you get to that point and they say that they're say to you, I want to talk this over with my spouse?
Well, number one, I want to find out why you didn't have both people involved right away.
Well, that's true. Okay, let's assume that I did. I mean, I'm just throwing questions out there. Let's assume
Yeah,
that
sure.
I did.
No, I got it. And I got the
Because I
answer.
get caught in NICE. So
Yeah.
Connie, I was kind of bouncing off of that NICE.
Yeah, gotcha.
They're both sitting there and they say, well, we really want to talk about this.
Yeah, I
I
understand.
want you to kind of share with everybody.
Yeah,
how-
got it. Okay. Hey, Val, I understand that. Okay. You're just like all my clients. I get it. Right. Let's go ahead and do this. Okay. Right now, the last thing that you want to do, Val, is spend a lot of time thinking about something, hemming and hawing over which plan to go with. Right.
Yeah.
Because you don't know what you qualify for yet. Right. So you don't want to waste your time doing that. Right. The one thing that we have established is that you need the protection. Right. Okay. So you just reconfirmed that they have the need for insurance. So you've already made that decision. So at this point, it's just coming down to the monthly amount. So let's do this to give you some time to go ahead and think about it without me here, right? Let's go ahead and submit for a lower amount to see if we can get you qualified. That lower amount, if you are, will go ahead and come out of your account. But like I said, you've got 30 days to go ahead and talk about it with each other. But now you have something solid. You have an offer from the company that you're now deciding if you're going to accept it or not. Does that make sense? Right?
Yeah.
And then I'm going to go ahead and send you an email so that y'all can sit down tomorrow morning or whenever at the breakfast table, sipping coffee and say, all right, we're approved. Which one of these plans do we want to go over? Which coverage option do we want? Because I get it. You need to go over your budget. The insurance company understands too, right? While you're thinking about this, they're thinking about you. Make sense? Cool. What was your middle initial again, Val? My team knows that's the first thing that I say.
That's
All
one
right.
of
What's your
your-
middle initial again? And I'm
that's one of
starting an application.
Ooh,
That's one of your
That's
killer
good.
word tracks. That's one of your killer word tracks right there.
that's a good one there. Oh my God, that's gold.
Thank you. I stole that too. Anyways. Yeah, that's how I handle it. Just going back. And then if they have any pushback, all right, there's a close that I've used successfully for many, many years. All right, it's called the 3P close. And it ain't price with freaking that guy on TV. It ain't that. It's a 3P close. Right? So what it is the product, the person, or price. That's what that stands for. So if they're giving me, if they say, oh, we want to think about it. Okay, I got it, Val. I understand that you wanted to discuss it with your husband. Got it. Let me ask you this. Do you understand what the policy can do for you? Do you have any questions at all about how the living benefits work, the accidental death, the cash back option, whatever it is? Do you fully understand how this product can help you and your family? You're like, nope. Okay. Now, Do you have any concerns over the company? Do you have any questions about how long they've been in business or anything else like that? No. Okay. So you're good with the company. You're good with the product. You understand that. Now, let me ask you a question. Have I done anything to offend you? Is it me?
No.
Because if it is me, I don't want to be the one preventing you from getting the coverage. I'll find someone else to go ahead and get you this product because you need it. Like, oh, no, you're great. Okay, cool. All right. Well, there's really only one thing left. Okay. You're like the majority of my clients, and that's the price. Right. Now, are you sure that, this was comfortable, this and that? No, not. All right, let's go ahead and back it down. And then I go into that, the close that we just did. Do you understand the product? Do you understand the benefits, how that can benefit you and your family? Yes. Have I done anything? No. You're our guy. You're our gal. Got it. Okay. Well, there's only one thing left, and that's price, right? Again, the idea is to go ahead and get the approval here. Last thing you want to do is call about something you don't know whether you get qualified for. Let's go ahead and put in requests to go ahead and get a lower amount to see if we can get that approval and give you time to sit down and talk with each other over the breakfast table to decide which amount's best for you. As long as it's done within the first 30 days. Got it? Cool. Yeah, we're good. All right, let's go ahead and do it. What's your middle initial again? That's it. Any other questions? Hello, Thor. Any other questions? Going once. Going twice. No late. All right. Done. That's it. Guys, thanks a lot for hopping on. Glad to be back. Let's close out this year strong. Like, do y'all know? You're welcome, son. Like, how many work days is left in the year for you? Have you gone over your schedule for the rest of the year? Like, I know all my travel days. I've got travel coming up to Florida. I got travel going up to New Jersey for the award ceremony for Tri-State. You're welcome, Wendy. Oh, that's you, Benita. It says Wendy Campbell with your picture. I'm going up to corporate, right? That same weekend. I'll be up there. I know exactly how many days I'm working in this month up to the last Thursday of December. I know how much more business I want to issue, how many more families I want to help. I know how many hours I'm working each day, right? It's not all the same. And I break that down into a weekly goal, into a daily goal, into an hourly goal. I know how much Shannon Womble needs to issue every single hour that I'm working. And I hold myself accountable. I know it's not going to be like that every single day, but I can track it. I can track it. And I can always ramp up my activity if I need to. I can always go ahead and add in an extra day. If I can't add any more days, I'm stretched, right? But I know I have to ramp up activity at certain times. So do y'all know that? I'm not hating on you if you don't. I'm not calling you out if you don't. But if you want to be successful and to get to that next level, stretch it. Stretch it. I'm like, dude, this is big goal. Yeah. But what if I did it? What if I did it? That would be awesome. Right. And then, like, I posted something there on Monday, like, shoot for the moon, land in the stars. You know, if I miss my mark, at least I'm still going to come out way ahead. Right. So I challenge you to go ahead and do that if you haven't already. Yep, I know how much my lead spend is, Connie. Yep. I know which leads I'm buying, right? All of them. I'm buying all the leads. I'm like, give me all your leads. Give me all. I'm like the Cookie Monster when it comes to leads, man. Give me all your leads, right? There's nothing I don't know of what I'm going to be doing. I also know, but I'm willing to challenge myself and stretch myself and things that are scary in this business, right? And I keep myself up against, I keep my back up against the wall, because that's when I'm best under pressure. I think most people are, right? Like if you're back in the corner, look out, bro, I'm coming out swinging, right? I'll end with this. I asked my wife last night, I was like, what do you think your superpower is? And she was kicked back on the, we got a sectional and it's got the recliner, and I'm sitting in a chair beside her, right? Little swivel chair. And so I got my feet propped up. I'm like facing her. I got my feet propped up on the sofa. She's stretched out on the recliner, and she goes, I would have to say it's patience. Patience is my superpower. I said, well, girl, I said, you're right. You're still married to me. You're definitely the most patient person I know, right? And I was like, well, I think my superpower is I keep getting back up. But you can't keep me down. I always keep getting back up. You know what she said? She goes, nah, your superpower is procrastination.
No comment.
I was like, you suck. But she's right. She's right. Like, I put stuff off. I don't put stuff off in this business, though. But I do have a habit of putting things off. So much so that when I was a kid, my mom said, God bless her, right? God bless my mom. I miss her. She said, you're a procrastinator. I said, what does that even mean? She goes, look it up. I said, I'll do it tomorrow. That's a true story. That's a true story. She goes, that's what I mean. Da, 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 da. Procrastinators. Da, 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 da. I'm like, oh my God, calm down, lady. So anyways, go ahead, challenge yourself, have fun today. And stay up in the live dial. All right. Thanks y'all for joining.
Thank you, Shannon.
Thank you, Shannon.
You're welcome.
Thank you.
Great
Shannon.
job. Thank you.
You're welcome.
Thank you, Shannon. Great job.
Thank you.
Thanks, Shannon.
Strategy.